Hi guys, Piotr here, this is Litefinance Global YouTube channel. It's my pleasure to be with you again. It's time to talk about tech revolution. Today we will discuss how AI, artificial intelligence, is transforming the way we are trading the stocks, Forex, crypto, indices and commodities. We are going to try to check how we may take the advantage of this new technology. So, without further ado, let's jump straight into the video. What is AI in trading markets? AI in trading markets refers to the use of advanced algorithms and machine learning techniques to analyze market data. Also, it might identify patterns and make trading decisions. AI-powered trading systems can process vast amounts of the data in real time, also enabling traders to make informed decisions quickly and efficiently. Another positive, AI systems can also learn from the past trades and adapt to the changing market conditions, which can lead to better returns and reduce the risk. There are different types of AI used in the trading markets, including supervised learning. This involves feeding the AI system with labeled data to train it to make predictions or classifications. Unsupervised learning. This involves letting the AI system learn patterns and relationships from unlabeled data without any prior knowledge of what to look for. Reinforcement learning. This involves training the AI system to make decisions based on rewards and penalties. There are several benefits of using AI in trading markets, such as improved accuracy. AI-powered systems can analyze vast amounts of the data quickly and accurately, leading to better trading decisions and to reduce the risks. Faster decision making. AI-powered system can process data in real time, enabling traders to make informed decisions quickly. Better risk management. AI-powered systems can identify potential risk and suggest risk management strategies to mitigate them. AI-powered systems can automate repetitive tasks, leading to reduced operational costs. Despite its many benefits, AI in trading markets also faces some challenges, such as first coming into my mind is data quality. The accuracy of AI-powered systems depends on the quality of the data fed into them. The pure quality data can lead into the inaccurate predictions and decisions. Overfitting. AI-powered systems can become too specialized to pass data, and it could lead to the poor performance when faced with new or unexpected situations. Regulation. The use of AI in trading markets raises concerns about its impact on the market stability, as well as fairness and transparency, which requires regulatory oversight. Let's check a few examples of AI in trading markets. We are going to discuss several examples of AI in trading markets, including predictive analytics. AI systems can analyze past data to identify patterns and predict future trends.
And that's going to be the helping hand for traders to make informed decisions. Sentiment analysis. AI systems can analyze news articles, social media feeds, as well as other sources of information to determine the market sentiment and adjust trading strategies accordingly. Algorithmic trading. AI-powered systems can automate trading strategies based on predefined rules and criteria. And that could lead to faster and more efficient trading. What about the fraud detection? AI-powered systems can identify fraudulent transactions or activities and prevent them from occurring. The AI will have real impact on the workforce in the near future. The use of AI in trading markets has the potential to automate many tasks usually performed by human traders. On one side, this can lead to increased efficiency and reduce the costs. On the other hand, it could raise the concerns about the job displacement and the need for rescaling and upskilling the workforce. The use of AI in trading markets also raises ethical considerations such as transparency. AI-powered trading systems can be complex and difficult to understand, and that might lead to the concerns about the transparency and accountability. Bias. AI systems can learn from biased data, leading to biased decisions and perpetuating inequalities. Privacy. AI systems can collect and process personal data, raising concerns about the privacy and data protection. I still believe there will be collaboration between AI and human traders, at least in the near future. While AI-powered trading systems can automate many tasks, human traders will still play a crucial role in the trading process. The collaboration between AI and human traders can lead to the better trading decisions, and you may want to ask why. Well, because human traders can provide insights and intuition that AI systems may lack. So, what's the future of AI in trading markets? Well, the future of AI looks bright and promising. As long as AI technologies continue to improve, we can expect to see more sophisticated trading systems. Of course, regulatory frameworks need to keep pace with the rapid technological advancements to ensure that the use of AI in trading markets is ethical, transparent and fair. Okay, it's time to summarize the informations. The use of AI in trading market has the potential to revolutionize the financial industry. AI-powered trading systems can lead to improved accuracy, faster decision-making, better risk management, and reduced costs. However, the use of AI also raises several challenges and ethical considerations that require careful approach. As technology continues to advance, collaboration between AI and the human traders can lead to the better outcomes for the industry and the economy as a whole. Guys, thank you very much. It was my pleasure to make this video for you. Please leave the comment below, like and subscribe if you haven't already. Take care and see you around. Goodbye.